Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick, as is the norm. On today's show, Dennis is going to officially declare the retail rally dead. I don't know why, but we're going to find out in a few minutes. So we're going to talk about that. We're going to talk about Tesla. We're going to talk about the follow-through in the media stocks from yesterday. And we have one guest today, Marc Chaikin. He'll join the show at 8:15. He is from Chaikin Analytics. Joel, what is doing this morning in the S&P futures?
Nice range in the futures overnight. We made a low at 27.72 That's just under Monday's low of 74 even. That's a big target on the downside. If we go into reverse, on the upside, we got some work to do here in the 27.80 handle. Pre-market high stands at 84.75. I like this 85 area for two reasons. One, it's your daily pivot. And also that's halfway in that little, halfway in the rebound, that little break we had from 98 to 72. So 27.85 is your level of the day in the September SPOOs. Bitcoin, can it recover from 6,000 up $245? It's 65.20. Hit a low yesterday, 2 days ago on the rebound. Moving on here.
Yeah, we're good.
Oh, we're all good?
Yeah, Dennis.
Okay. Dennis can't hear me?
Well, Dennis can't hear me, but I hear us, and we're good. Dennis, you can't hear us? Dennis says he can't hear us, so...
What about everyone in the chat?
I'm not sure what's going on with him. Oh, there we go. Let's see if we got Dennis back right now.
Was it a Spencer error?
It was not a Spencer error, so I don't know what's going on.
Okay.
Maybe it's a Canada error today. I don't know. We haven't had... Dennis, are you with us?
I can hear you now.
Okay. That was weird.
Can you hear me now?
Yeah.
It was just like you guys were speaking, but I couldn't hear you. All I could hear was sound coming through on the show, but
weird.
Not through Skype. So I guess we're good. Gremlins haven't been there for a while.
It's been a while. Knock on wood.
Forgive us for the early morning gremlins here, guys. Lots going on. What's up?
What's up?
Just finishing up crude up 21 cents. It's 66.85 and gold in the green here by 580. Silver joining suit up 14 cents at 17.13. Dennis, everyone in the chat wants to know why the retail rally is officially over.
I think it's over. I thought it ended a few days ago when I tweeted out Macy's upside capitulation when it broke over 40. You can see the big red candle yesterday in a lot of the retail stocks. Macy's ugly day. Kohl's ugly day. That continues here today because, we were saying every day you see a retail stock go up 20% on earnings. Started last night with Tailored Brands. Now you're seeing them go down 20% on earnings. TLRD annihilated here today. MIK, same story here this morning. You can say, but they were disappointing results. But again, it's just about sentiment coming into it. These stocks had run up, but not only that, it's just that every other retail stock had been running. So it's like the market always tries to punish maximum amount of participants. When you start seeing the trend turn where they're hitting something down 20% on earnings, it makes you think that the worm has turned here. So I think the retail rally has topped out. So I am bearish retail stocks here now and a seller of rallies in them.
All right, let's go right to that Tailored Brands, Joseph A. Banks, Mr. Warehouse earnings report.
TLRD, right?
Yes.
I can never get that ticker right in the first
No,
try.
they keep changing it.
I know. TLRD, all right. Q1 adjusted EPS of 50 cents versus a 48-cent estimate, so a 2-cent beat there. Sales, $818 million versus $794 million, beat there as well. They also reaffirmed their fiscal year EPS outlook.
And stock trading down significantly here in the pre-market. This is going to knock the XRT down big time as well. We're down 17%. This makes up about 1.7% of that index. So just TLRD alone will knock the XRT probably down about 0.35%. So half of your loss here this morning in XRT, which is a retail index, is all thanks to Tailored Brands. TLRD, it's off the lows. That's the good news. The bad news is it's a retail stock, and all of a sudden retail stocks are out of favor.
Took it down real off the headline number 2542. We've climbed back into the 27 handle. 25.42 is your level on the upside. Or on the downside, 28.47 on the upside. That's the highest rebound point. But Dennis, I'm looking at the monthly chart here, and this has had since August of 2017, it's had one down month. Just from like a technical standpoint, couldn't you just maybe for a trade buy it in here for the next day or two and maybe get back up to 30? Or the fundamentals too much for you to even
think about what happened. And this is how I'm playing. This is why I'm not a buyer.
Okay.
Because what happened when we saw these other retail stocks gapping up 20%? What happened?
It kept on going.
These are gapping down 17, 20%. I think they keep on going. So I think you're going to have a lot of people maybe saying, oh, it's a retail stock, it's going to bounce back. I think they're not realizing that the worm has turned. I'm telling you, I believe it has. I think retail turned yesterday with the ugly day that Macy's had, which is one of your leaders, the ugly day that Kohl's had, which is one of your leaders. And I think, even looking at Kohl's, like you had the reversal the day before, it got to almost $80. Everybody had to own it. It went into full upside capitulation, Kohl's. In 7 days, went from $66 up to $80. It's just got silly. So now it's like people who are chasing are going to get punished, and market always likes to punish the chasers. So I think retail's got to have a little bit of sell off here for a little bit, and that's why I think Tailored Brands disappointing quarter on top of maybe retail turning here all of a sudden. That adds up to maybe going to test those pre-market lows or after hours lows, which was in the 25 handle. So I'm not a buyer here of Tailored at 27.66. I'd actually be a seller.
Two things. One, it was actually a good quarter according to the estimates. And two, how do you remember what the top holdings are in like XRT, for example? Like how do you remember that?
Well, XRT is actually balanced. So the funny thing is they keep balancing that, and as stocks move, they have to do some adjustments. They try to keep it equal weighted. But you can just go to like any, ETFchannel.com. You can just go there, type it in. You can look at what the percentage holding is.
Yeah, you can look, but how do you remember?
That's my question. I looked up last
doing
night
this for 19 years.
So I'm trading XRT. I want to know how much, I trade all the ETFs. So I want to know how much that stock is making up in the index trading down.
Okay.
If XRT is trading down only a nickel or a dime, it might be a sell. So I'm always looking for those opportunities. That's just arbitrage. So you're looking at those, arbitrage opportunities where, the basket of stocks is going to open potentially less than where the index or the ETF itself is. And then you would sell the ETF and buy the basket. But in this case, it's just simple. You look at Tailored Brands trading down significantly. It's a good chunk of XRT. Now, if you have some sympathy moves from other retail, you can, figure out that XRT might actually have an ugly day.
And Dennis, I think that's just going back a long time. We've always talked about the components in the indexes, going back to the bright days, the S&P components with, the transitions they make. And, it's always good. And especially if you're the way you like to do a lot of trade, doing the arbitrage and everything, it's very important. And it's interesting. The XRT is not a huge mover here. So if you want to play it, long term, that's had a heck of a run too. It's just it's not a real big mover, but that's not the only retail.
I want to make a point here, and Spinner's bringing up a good point. He says, well, LB bounced when it disappointed, but LB bounced when retail was still hot, when everything was in retail was just like, it's got to own retail stocks. And I bought Al Brands for the potential bounce too. I've sold Al Brands now because I stuck it in the swing trade portfolio. And I was saying, with my purchase that I thought, maybe a rising tide raises all ships here. I know LB is trading up a little bit here in the pre-market on a few hundred shares, but I've sold it because I think retail, I think it turned. So again, I'm all out of retail.
Okay. All right. So we'll see. You know what I'm going to do with Tailored Brands? Let's just file the price action today. I'm not going to hop in today.
For sure.
A lot of times you get those, those washout lows and the continuation. So we'll watch the price action. We'll watch the low. We'll watch the high and the close. And if you're right, boom, it's going to make a new low tomorrow or the day after. If not, if it holds, it might be a little bit of
today's a big tell.
It is. There you
go. And if you see it bounce right back here, then, my thesis could be incorrect. And I'm not always right, obviously. I just feel like it's turned. But I think and I don't know if I'm coming here in short. It's hard to short stock down $6, down 17%. But I'm not coming in here with my money and buying it.
Nope.
And that's the difference. And I was looking at pullbacks yesterday. I bought the Hershey's pullback yesterday. Why? Because I felt like sentiment towards food stocks has turned. I think it still has turned. I bought the HSY when it got close to 90. I'm already up a point net. Now I'm going to stop out if it makes new lows on the move. So that was just, a swing trade, more perspective than a long-term investment. But I stuck it in there because I thought, that it had turned. And actually at one point in time, I already got back most of the losses. Then the Fed decision came out, and obviously it sold off after that. But, it's all about sentiment towards the sector. That's what I analyze first as a trader. And I feel like it turned yesterday in retail. And if you can identify those turns early, you can make a lot of money. And that's how I've made my living for 19 years, by identifying the turns earlier than the next guy.
And you got it right, and you got it out here. 5 minutes until Marc Chaikin comes on, but we got to talk about just a little bit from yesterday. Dennis, Jazz wants to know, would you buy AT&T here? And I know you already own it, but we had a good talk about that on the pre-market show. You're not a buyer here, Dennis. You're worried about that debt.
I was a seller, and I said it, I think, yesterday on the show. I actually owned AT&T in my long-term investment portfolio. I bought it like 10 or 15 years ago. It spun me off AT&T Wireless. It spun me off another stock I can't even remember. It gave me a bunch of cash. Overall, my cost basis probably on my AT&T shares, considering my dividend, is less than zero. I've taken out more than I probably initially put in it. That being said, I still look at it here, and it's a small position that I've got in AT&T because they'd given me all this other stuff from an original position way back in the day. I just look at it and I think, what is the catalyst here to drive it higher? They're paid a lot of money for the acquisition of Time Warner. They're laden with debt. I mean, this is just a recipe where I think, I love the 6% dividend I'm getting, but I just think, I look at this, I said it yesterday, I think there's competition coming for them. And I'm going to stick with that thesis that I think it doesn't get easier for AT&T going forward. And that's why I'm very cautious. And that's why I'm actually thinking about dumping my long-term investment in this thing. So I think AT&T, and when I look at it 2 years from now, is lower than $32, believe it or not.
And it's going to take a while. I mean, I think you had huge volume yesterday, monster volume. I think there just might be some long-term shareholders, nearly 200 million shares traded yesterday. That's like 4 times the volume. So it's just not going to be going right back up. And I think you might have had a lot of fundamentalists, thrown in the towel there. Also, one thing you got to, if this is a good deal, if this is going to be good for the company, you ain't going to find out next quarter. It's going to be, 2 quarters, a year, 3 years down the line for this this big investment. So 6%, you could take that, but if the stock drops 10%, you're a net loser of 4%.
Yeah. And Spinner saying, the dividend's barely covered there. I don't know the stats on that. I don't have it in front of me, but I believe it. I mean, I just look at the debt here, and we saw a situation, where a lot of companies have been struggling with debt. Now they're going to take more debt on, probably to finance this Time Warner deal. It's a lot of unknowns here. It's not as safe as you think, that dividend. I think it's, safe for the short term. Long term, I'm not sure, and that's why I'm starting to get to a point where I was kind of AT&T more for a bond play. I feel like there's safer plays out there now. If you just want dividend yield, look at Dillard's, and I've said retail's turn, but DDS is up at $92 now. That DDT I keep talking about, 25.85 yield to 7.25%. I mean, it hasn't been called. It's been callable for like 6-7 years. They obviously just aren't even paying attention to it. I mean, I get 7.25 sitting there on a Dillard's preferred that looks pretty dang safe right now, considering that stock just rallied like 35% in the last month. So DDT, I like that as a better play if you're just looking for dividend yield as opposed to AT&T. I think it's safer.
Yeah,
at least for now.
And what about the rebound in Comcast yesterday? You talk about opens and lows and proximity there. That stock opened right into support here. 31.03 ticked 30.99. Had 2 other lows, 3 other lows, actually 4 other lows at the $31 area, and got all those losses back, and ended up down 6 cents on the day. Spencer, they made an acquisition here. Tell us about it.
I'm sorry, who are we talking about? I was trying to call Marc.
Comcast.
Okay, call me flat-footed there. I apologize.
It's okay.
Comcast. It's 8:14. So can I call Marc, and can we do this?
Sure.
Let's get Marc, and we'll come back to this conversation.
All right, I'm calling Marc Chaikin from Chaikin Analytics. He is their founder and CEO. Joins us every Thursday at 8:15. We don't normally call him on the fly. I'm going to do it today. So I hope he isn't too angry with me. And
Marc, have you ever heard Marc angry? Not Marc Chaikin of Chaikin Analytics.
He's
one of the nicest guys on Wall Street.
I haven't heard him angry, but that one time we brought him on the fly, and I don't know. All right, call Marc right now. Let's see if he is aware that he'll be on the fly. He's got some ideas.
Morning.
Hey, Marc, you're live on PreMarket Prep. How's it going?
It's going well. How's everybody there in Detroit?
Going well. What is on your mind this morning?
How we make money on the long side. Still bullish on the market and amazed at the resiliency of the market in the face of potentially headline-moving events, starting with the Korean summit and the Fed meeting, and we just seem to be weathering everything beautifully.
So you're looking for us to make new highs over what horizon?
I think between now and the early part of earnings season in July, earnings reports are just going to be fabulous. FactSet's estimating up 19% for the second quarter. And although in the first quarter we saw a sell on the news mentality, I think that's sort of baked in, and that we may surprise and start seeing stocks respond more positively to very bullish earnings reports that begin roughly around the 10th of July.
Marc, we just want to pick up from a discussion we were having just before you came on, Marc Chaikin of Chaikin Analytics. I mean, you've been in this business a long time. You've seen the different, I guess, phases of AT&T, right? Back with Southwestern Bell, and what were those other companies? GTE. Boom. I mean, here we are taking on a huge amount of debt. Really, the street made a statement yesterday, trading 200 million shares on the downside, 6% dividend. Is this any place to hide, or are you? I'm sure the Chaikin Analytics has, I mean, it cannot be positive in this thing, but give us your technical and fundamental outlook on AT&T.
Let's start with my psychological view. Actually, the power gauge rating has been bullish off and on AT&T going back to October, but it's very sporadic because the stock's been in a downtrend. Obviously, there's some merger arbitrage going on. I'm just highly skeptical of big bureaucratic companies like AT&T when they get into the media business, and it's never worked well in the past. AT&T has a particularly poor track record in that regard. So I'm not a big fan of AT&T. Time Warner obviously has some rich assets, but this just doesn't play out well in my mind, and the market is basically telling you the same thing.
All right, Marc, you're actually bullish a couple of stocks. I don't know if you're listening before, but Dennis was saying how he thinks the rally in retail is sort of topped out. You're actually bullish a couple of retail stocks. Can you tell us which those are and why?
Well, Macy's has been the primary bull in Chaikin Analytics. It pulled back yesterday, along with all the apparel stocks. Macy's has really turned it around. I actually shopped at Macy's twice over the last 2 weeks, and the experience was great. They're actually putting a sort of online into the retail box. So they're trying to be a hybrid where you can take advantage of online while you're in the store, but more particularly still very bullish on the apparel stocks, which sort of verge on retail. So you had a pullback yesterday in the market leading apparel stocks like PVH, which has a bullish power gauge rating. Also very impressed with the price action of Under Armour. As you know, the power gauge was bearish on Under Armour for 2 years through February. What we're seeing now is neutral power gauge rating, but very bullish relative strength. And anytime the stock dips, I think it's a buy. So these stocks have gotten very overbought. They've gotten ahead of themselves. And I think on a pullback, you've got a reason to buy them.
Okay. All right. Let's move on to some of the high flyers here. Netflix could have perceived the news yesterday as bad news, but that that price target raised by your buddy over at Goldman just got this thing going up 387 in the pre-market trading, made a new all-time high yesterday. I mean, what can you say bad about this stock?
Valuation. But here's the interesting story, and this is more of a sentiment story,
Sure.
and it plays out over time. USA Today had an article in their investing column last Thursday. A really good writer. I've been interviewed by him. He basically quoted people saying that college students should take their summer earnings and invest them in the FANG stocks as a way to turn a little bit of money into a pot full of gold almost overnight. They say they don't ring a bell at the top. That's as close to bell ringing as I've ever seen. These are great momentum stocks, so they're not going to turn that way, but insiders are selling all these stocks, including Netflix and Facebook and down the line, Amazon and Google. So if USA Today is telling you to buy and the insiders are selling, you can keep trading them as momentum stocks, but it suggests to me that we're starting to get into that frothy stage where the sky's the limit, but you can also see the sky falling at some point.
You're going back to the days of Paul McCrae Montgomery, right? With the Time magazine indicator. Remember, he used to write for Barron's quite a bit, but by the time it hits Time magazine or hits the media outlets, a lot of times it's a turn in the market. Out of the chat here, we have Downward Dog asking about a retailer. Bed Bath & Beyond had a nice rally attempting to fill the gap here. What's Chaikin Analytics have to say about Triple BY?
Well, it's neutral at best. Okay. You have a nice rally right into that gap and into resistance. I think this has got a hard time getting going unless you get an activist investor in there, pushing for some sort of restructuring. I don't think the stock goes anywhere. I'd much rather buy Macy's on a pullback than BBBY. Also, you got to take a look at Best Buy. Just take away one of the B's. Had been bullish, negative response to the earnings that came out about 3 weeks ago. It's rallying up. That's another one that's going to have trouble now because the power gauge has turned neutral. A lot of institutional selling. So retail is a place where you got to be very selective. Right now, it's Under Armour and Macy's that I'm seeing on my radar screen.
You've got other thing. Go ahead.
Go ahead.
I was gonna actually change the subject, so I don't know if you wanted to just finish your point.
No, I just think that you got to be highly selective in the retail space because they're not out of the woods yet in terms of what Amazon could be doing in the space. So you've got to be highly selective, and management is key. And where there's good management, there's opportunity. But I wanted to say that in the food retailers,
yeah,
interesting. Power gauge turned bullish on Chipotle. It's neutral here temporarily because the technicals have gotten way ahead of themselves, but that's a big turnaround. It's been bullish on Chipotle for about 6 weeks. So I see a great swap out of two really underperforming fast food chains, Starbucks and Yum Brands. So I think there's an opportunity to get out of two really underperforming big name food retailers and then use that money to swap into Chipotle on a little bit of weakness that seems to be starting. And again, everything retail and apparel was down yesterday.
I just want to get the power gauge rating on a few stocks. Let's go to you just talk food. Let's talk the food stocks themselves. We can look at like a Kraft Heinz, KHC, or a Mondelez. These stocks were really hit hard beginning of May. They've started to find a bid towards the end of May, and now they're starting to actually lift here in June. What are your thoughts here, and what's the power gauge say for Kraft Heinz, KHC, and Mondelez, MDL, Zebra?
Well, I think you're getting a little bit of a oversold bounce. Neutral right now on Kraft Heinz. I'm not a big fan of consumer staples. Consumer staples don't really do well in the final phases of an economic expansion or a bull market. So whether you think that we're in the final stages or there's legs, consumer staples is not the place to make money. You have had a good reflex rally. Mondelez, the power gauge, is still bullish unless it gets above 41. It's still bearish. Unless it gets above 41, it stays bearish. I think this rally is an opportunity to get out of these stocks. Granted, they have, in general, good dividends, but you can get good dividends in cash right now. So with interest rates moving up, I think this is an unexciting group. It's a source of funds. I think I'd be looking, to buy things like the oil refiners on weakness. So if you get out of some of these staples, particularly in the packaged goods, Colgate, Procter & Gamble, Kraft Heinz, you can get into some more exciting sectors.
Well, speaking of exciting sectors, let's talk some of these small Chinese stocks that have really taken off. And I want to know what the power gauge is showing on a stock like IQ, HUYA, which these two stocks have basically doubled in the last month. And we can throw BILI on that one too, because we've all been trading that one in the chat as well. All these stocks basically doubled in the last month. What's the power gauge say on something like this? Because these are obviously overbought, but does it continue?
We don't have enough data to have a power gauge rating on IQ because the newest.
How much data do you need?
We really need a year's worth of data.
Okay,
you need
so these are newer.
The earnings. Yeah. What's the other one you've been trading?
These are all newer IPOs, so you might not have enough data on any of these. HUYA and BILI. They're all out in the last few months.
I think these are just they're momentum stocks. You trade them like momentum stocks. Use intelligent stops or sell strength, sell the spikes. Eventually, as we saw with companies like GoPro, the bloom is off the rose, and then the downside is a slippery slope to ruin. So, don't know these companies really well. Price action is fabulous, but those things tend to go away. And I'm always suspicious of small cap Chinese stocks because the reporting requirements are just not as strong as they are here in the States. So this is caveat emptor, buy them, trade them, but don't think of them as long-term investments.
Don't fall in love with them. Before we let you go, we got a few stocks here in the chat. Texas Linda wants your thoughts on Bank America, just hanging out here at the $30 level, trading $29.81. The market is gone without the financial stocks, so you're looking for them to pick up here in the second half of the year.
I am, but you're not seeing it in the price action yet. Bank of America is neutral unless it trades above 31.5. But buying it here is a leap of faith. The stock can't get out of its own way. And that's true for most of the major banks. When we look at the major banks, very few bullish ratings. Bank of New York is the only major bank to speak of. And they've really got an investment arm. So they're playing more on the investment management side. But right now, I'd say the banks are neutral at best, and they've got to prove themselves. I don't see a lot of great price action. Don't see any institutional demand for these stocks right now.
What about the utility sector? Interest rates going up incrementally. We're getting a specific question from Matt and Beyond about Duke Energy, DUK. So talk Duke in specific, and then more broadly the utility sector.
I think the utilities are basically sell on strength. Unfortunately, Duke is at the bottom of the page, meaning it's trading at new 52-week lows. So that pretty much tells you everything you need to know. Power gauges,
though, isn't that the golden rule of technical analysis, that you buy the bottom of the page and sell the top of the page? You didn't learn that?
Not exactly. That's bottom fishing in my book, and bottom fishing is the most expensive sport in America. So nope, I can't go there. I mean, you basically want to buy high and sell higher if you're looking for a mantra. Buying low and selling high, not a great prescription for wealth building. It's a prescription for wealth destruction. But I mean, granted, the stock has almost a 5% yield, but the thing with the utilities is the weakness started when the tax bill passed in December. So here you've got regulated industry with very low margins for growth, selling at high multiples back in November, December, and they're the ones who don't benefit from the tax bill. So I think the utilities are just not a place to be. That 5% yield is a red herring because since December, you've lost over 15% in the stock. So that wipes out 3 years worth of dividend yield. Can't do anything but sell these on strength, in my view.
All right, the hot stock of the day, Tailored Brands, getting tarred and feathered. You're still looking at stocks in the retail sector. Is just a chance to get in here at a discount, or is this hands off on the Chaikin power gauge?
Well, power gauge was bullish going into the earnings report, so our bet on that one. The last 3 earnings reports triggered a positive earnings surprise and new highs in the stock, but something went wrong here. I can't tell you what it is. Typically, in this bull market, when you've gotten a big disappointment like you're looking at here in the pre-market, you've got to wait 2 or 3 days for the dust to settle. But the power gauge will turn neutral if the stock closes under 29. And I think this is hands off until you see a little more explanation about what happened. Men's Warehouse is a good brand, but this doesn't seem to be working. And so it's hands off for me for at least 2 to 3 days to let the hot money get out of the stock and the algos sell it and see where it settles. Might be a buy if it can hold support in the 25 area, which is sort of where it broke out, 25.6 back in March. But this is a big disappointment because the power gauge had been bullish.
All right, Marc Chaikin, thanks so much for the time. Have a good one. My
pleasure. Enjoy, guys.
All right. You guys want to go over to Comcast? We can do Comcast. Their offer, which we got not the most surprising offer. We kind of knew this was coming, but they did come out with their offer yesterday after the bell. $35 a share in straight cash. That's a 19% premium on the previous offer for assets of Fox, most of Fox assets.
And so Fox gets a little more of a bid here. I mean, it's obviously no great secret that one of these companies is going to buy this. So obviously Fox is loving the pricing war, especially if you're a Fox shareholder. What was interesting was a point that Joel made, though. Disney and Comcast both were significantly down yesterday morning on the fears that they were going to a bidding war. And those fears quickly vanished after the open because both stocks got bought. I mean, Disney rallied from the lows. We got all the way down to 102.67 and rallied $4. A big move for Disney coming right back. So a vote of confidence to both of these stocks. Maybe they were just oversold, but Comcast went straight up to open down at 31. In the first half an hour, straight up to 32.25. These are big bounce backs for these two stocks that were going to be the potential acquirers.
Yeah, and the deal comes through here. Comcast trading up 22 cents. So that was a big low from yesterday. Really like to see some follow through today. Trading up 22 cents at 32.54. S&P's rallying once again off Draghi's comments here. Now up 8.5, 87.50, just climbing the wall of worry here. Forget about yesterday's sell-off, folks. On the upside, we've taken out 27.85. Yesterday's high and the high from, we got 3 highs up there between 27.94, 27.96. So that will be your signal to a next breakout on the upside. Dennis, did we get some buying balances here? Maybe given the
we did a little bit, and that did help us lift a little bit more. But we had been a slow, steady climb here all morning. Some of the banks have buying balances. They were trading in the red. They're now in the green. I'm still cautious. Their TLT has rallied significantly here this morning. So it's actually surprising that you see the banks trading up. So I'm a little bit skeptical of the pre-market bank rally there. If I'm actually looking for a source of weakness, I would probably lean on the banks as potentially maybe going to be that source here today. Just looking here, TLT is up 77 cents. Usually the banks will be down on that, but S&P is helping the banks as well. So, and they were trading up last night. So we'll keep an eye on that sector. Just looking here, other imbalances. We got Twitter, 41,000 to buy. That continues to just find life. I don't know where the top is in that thing, but it's been incredible now. And if you're buying it now, I'd say you're way late to the party. But ride the momentum until you can't ride it anymore, I guess. Just looking here, AT&T, huge buy bounce, 289,000 shares. That's big. That's bouncing the stock a little bit here this morning, but I think nothing more than a dead cat bounce. I don't think this is going to come right back. I think there's a lot of people who got the beats on this. There's still the arbitrage with the merger happening as well. So obviously a lot of traders sold AT&T, and I know I had some people asking me about, how that works. So basically, if you short AT&T, and you buy Time Warner, it was the cheaper because it was trading at the discount. So when Time Warner turns into AT&T, it will naturally cover your short. So you can short AT&T and not even have to ever cover your short, because your Time Warner, if you're shorting AT&T and buying Time Warner, your Time Warner is going to turn into AT&T, and that will naturally cover it. So that's how the ARB is played. And that's what we saw yesterday. And now it's kind of, trading close to in line. I think it's only a 1% discount, as they obviously think this deal is going to go through.
Retail sales rose 0.8% in May versus 0.4% expected. So that's a nice boost for retail sales, but it seems like the stocks may have been anticipating that. As well, spinners bringing our attention. The U.S. Open is this weekend. JP Morgan jumps on Callaway Golf, who's made it just one heck of a comeback. I'm not sure who they sponsor in this, or I know Under Armour is big with who's the young kid that's been Jordan Spieth. So I mean, it may be a little bit of a stretch, but if you see someone leading with that Callaway bag, I mean, that stock. Have you looked at that lately, Dennis?
They all look like that, though. Every retail stock, like, find one that doesn't. Obviously Taylor Brands and MIK today don't. Right. But I mean, before today, they really did. I mean, find your retail stock that really, besides L Brands too, which, obviously I talked about and I thought was going to lift. It didn't. And, now the retail's turning, I'm scared on that one, which is why I sold it. But, there's every retail stock. I mean, it's, again, the rising tide lifts all ships. And it really is the case in the LOI as well. So many retail stocks look the same. Just been straight up for a month and a half. And are we out of the woods? Just like, Marc Chaikin just said. I don't think so. I don't think we're out of the woods on a lot of this stuff. Maybe Callaway's a different story, maybe. But, I mean, you can buy golf clubs on Amazon too. So I just think, this rally, especially on stocks like Kohl's, is way overdone. I mean, it's difficult to call the top. I'm trying to call it because I think the top went in yesterday or 2 days ago when Kohl's got up to $80. In hindsight, it's a little bit easier because it's 5 points off that now. But, I mean, I just look at all these things and I think, wow, we're scared to death to own retail stocks, as the market was scared to death to own retail stocks a few months ago. And then we're going straight up here for the last month and a half. I think it's so overdone.
Citigroup agrees with you on that. Kohl's rate on Kohl's topping out. Spencer, do you have the downgrade from Citigroup?
Yeah, downgrade just to underperform, I believe, for Kohl's. I don't know if there's a price target here. I'm sorry, downgrade to neutral. The prior price target was $51. I don't know if they came out. They must have changed it, but I don't have that new
51?
price target. 51? That was the old price target.
All right. Well,
there's probably a ton of analysts that have, $50 price targets on it. It was $30. I mean, the stock was $35. So, unless you've done some analyst action here in the last 6 months, the stock back in November was $37. So unbelievable. I mean, it's unbelievable. And congratulations to anybody who owned these retail stocks. I did not participate that much in this retail rally at all. But congratulations. I mean, these things were monsters, but I think it's time. If you're in these things long, I think it's time to run the register. That's my own opinion.
Yeah. Or sell some calls or stock replacement strategy.
Lock in some gains.
Yeah, lock in some gains, right? You don't want to hold on forever. And Dennis, Crocs is even rallied in this one here.
Yeah, when Crocs is rallying, that's telling you this is getting look at the Crocs. Look at this move. Holy cow. In the last month, Crocs went from 15 to 19. The company with holes in the shoes. No holes in the stock right now, although yesterday's candle, a little bit of a tell too. It was definitely profit-taking day in retail. As a top end, maybe not long-term, but I just think, yesterday was a turning point.
I would just say that I have some Crocs slippers, and they're so comfortable. That's all I'll say about that.
The generics are comfortable too. I have the generics, and they're very comfortable as well. I can cut holes in your shoes, Spencer, if you'd like.
Do you want to hear my retail story from the weekend?
Sure.
Yeah, tell me.
What the hell?
Well, my Apple phone iPhone was having some problems here, and Dana, Emily, or Lisa couldn't fix it. So I made an appointment. I went out to the mall and I made an appointment. I go out to the Apple store, And they go this, and I might need a new phone, this and that thing. Well, bottom line is it was a 2-hour wait. They had to replace the battery and update the software. And I'm like, I need a new pair of shoes. I need a new pair of summer sandals. I went to 8 different stores and I could not find the same pair that I bought about 13 years ago. So I guess where I ended up getting a pair of summer shoes.
Yeah, because it's been 13 years, Joel.
I know. But they should have. They're such a good shoe.
Shoes change.
Guess where I bought a pair of shoes? No,
Payless.
at the mall.
Payless. I don't know.
A stock we always make fun of all the time.
I don't know. Foot Locker?
Skechers.
Oh.
I bought a
Skechers.
I bought
you want the shoes? I got a pair of Skechers.
Yeah, they were really light, and I went in there, and I kept on asking everybody in the store, do these look like little kid shoes? And no one agreed. So out of my 8 stores that I went to, I ended up buying a pair of Skechers. So
it all worked out.
So I'm initiating Skechers.
At a hold?
No, I'll give it a buy. It had the big gap down after earnings.
We don't do ratings. He's joking here, guys.
I was joking. Okay.
Somebody will come and say, you told us to buy this.
27.36. That's the low of the move. That's my stop out on Skechers.
You jump over here. Holy cow. These banks. I just want to talk to bank stocks for a minute because they got rocked and now they're rallying. So basically they were trading up and Draghi came out and Bank of America went all the way down like 29.74. It's back up to $30 here. I mean, these banks are really all over the place. This one, Goldman was up, then it was down, now it's up. So yo-yo session here for the banks as they continue to bounce around significantly here. A lot of this with the ECB comments from this morning.
What's the turn here in Bank of America? I mean, I see a pair of highs here at the 30.50 area. I know Marc talked about $30, but to me, I think I'll keep an eye on this one. If it can finally clear 30.50, I think it might be on the upside. If not, I mean, these stocks just look tired after the big runs that they had, and just a horrible looking chart is Goldman Sachs. I mean, it does get some.
Still look great,
it's starting to maybe starting to turn a little bit, but holy macro, these stocks have markets hasn't affected the overall market, but let's see if we can get a turn some of these bank stocks. Finisar reports after the close today. Any opinions on Finisar? I mean, seems like this one just tries and tries and tries, and then has an earnings report or bad news. It gets knocked down again. But getting off the mat here, $18. Last 2 highs yesterday, 18.20, 18.21. Opening a little resistance here. I'm just giving you technically. I think Sean likes one. I'm not sure about that. But Dennis, any thoughts on FNSR?
I'm logging it right now.
Really?
That's just ahead of I've got that strategy where I buy stocks ahead of the earnings reports and then I sell them, just trying to capture the alpha of the run up ahead of the report. So I am long it right now just for that reason. I will sell it before the report. I'm not intending on holding this through the report. So it's just basically a short-term trade, trying to extract that alpha, which has worked really well for me. I mean, this earnings season, it's worked great, where stocks have run up ahead of the reports and then sells off after. I mean, even MIK last night was trading up $1 ahead of the report. And, now it's slaughtered, which we haven't talked about yet. So, Michael's, let's quickly just go back to the retailers for a second, because MIK, the scrapbook store, is annihilated. This trade up to $23 ahead of the report last night, Joel.
This is one that we do give a lot of grief to. I feel like
I'm going to give it more
every
grief.
quarter.
The $25 scissors.
39 cents that beat the estimate by a penny. Sales $1.156 billion. I don't believe there was a sales estimate for that. They reaffirmed their fiscal year outlook. Their Q2 EPS guidance is 12 to 14 cents versus a 19-cent estimate, and comps are going to be flat for the quarter, is what they say.
The only thing going for it is that 18 support is just enormous, and we haven't breached that yet. So as long as it can hold 18, you have the potential for a technical bounce.
Oh, yeah.
That's it. That's the only thing. You take out that 18, that line in the sand, and look out. But, I will say, it's a significant sell-off already. You're coming in, you've stalled here, it looks like in the lower 18. So it looks like 18 wants to hold.
And also think about like the opposite. Like if you were shorting this thing at 19, 19 and a half, 20, 20 and a half, 21, boom, boom, boom. And then, the pain inflicted on you when it hit 23.20 in the after hours. And then now you're getting a little bit of a dip. I mean, short-term trader or long-term shorter, whatever, I have to agree with you on this $18 level. Giving back all the gains since May 7th when you did bottom at 18.10. So we'll see how many up days. Oh, maybe we should have just shorted this based on the update rule, Dennis. It had.
Well, yeah, and you know what? I wanted to short it into the report. I was actually talking with one of my friends at Bright last night. Was trading up. I was like, I should take this short into the report, but it's scary. I mean, it's always scary just going in the reports. But after I watched what Tailored Brands it did, I really wanted to short it into the report, but I did not. And I came in this morning and I was like, oh, I should have did it, but I was too chicken. And obviously, I don't like holding stocks with reports or just gambling, that the report's going to be bad. But just the response to Tailored, you knew if there's anything bad, they were going to hit it. And then the guidance was not good at all. So not surprising the stock's down 50%.
9 straight up days in a row, Dennis. And a stock can't go up more than 8 days in a row. So
isn't that a rule?
Yeah. Another one of my rules.
Another Joel rule there.
Flexible rules here. All right. S&P's just hit 89.25. So we're having a nice pre-market rally here. SPOO's up 0.3%. And as Dennis was talking about the indexes and the correlations here, I mean, I of course, I keep up the top 10 components in the index. I have the SPOOs traded up 0.29%. And then I'm looking at 8 of the 10 components are all trading between up 0.25% and up 0.3% there. So there you go. You have arbitrage working at its best here in the pre-market trading. Spinner wants us to take a look here at the cruise stocks, and they got shellacked, right? A couple days ago. Was it a downgrade or was it?
Well, RCL has earnings this morning. Had earnings this morning.
Okay.
So I'll give you the number. I'm sorry, they didn't have earnings. They gave guidance. Was what they did. They gave fiscal year guidance, EPS guidance, $8.70 to $8.90. That's the range. That was in line with the 886 estimate.
And stock trading up right at that 110. I mean, that's the level it needs to get above 110.42, the high back on May 25th. You can go back into April 20 or May 2nd, also a high just above 110 there. So you got multiple highs just kicking around. Actually, there was 109.84. Call it 110, the line in the sand. That's the level that it needs to get above. Get above that level, then you open up a little bit. I mean, it has come back. These stocks are starting to show a little bit of life. I mean, it's not a coincidence that crude is starting to leak here a little bit, and they start to show life as well. But still, higher crude prices overall. I don't know. And watch the airlines, and the airlines are showing some life too. Maybe this is a turning point, but I want to see this thing above 110 to really start to get excited.
Just talk about turning points, Dennis. You were talking about how anticipating things. If you would have just been fading Morgan Stanley here, June 5th, they negative note on the cruise lines, knocked everything down on that day. And you know what? For example, CCL put in a double bottom and rallied. RCL put in a double bottom and rallied. And then NCLH, what did that do? That put in a double bottom and rallied. So street fading Morgan Stanley there on that note. See if we could get continued follow through today.
Can we talk about Tesla a little bit? Just because it's interesting. So Tesla, Elon Musk bought about 72,000 shares between 342 and 347. Wow. That came out last night. Excuse me. Also this morning, our friend Gordon Johnson really going out on a limb. He's lowering his already really low price target. Lowering his price target on Tesla to $93. That is a street low.
93. He goes extreme. That is really, he definitely gets the award.
Street low.
Extreme. Where was his price target before?
Let me see here.
99.
Yeah, 99.
So he went from 99 down to 93. He thinks he had to lower that.
I don't know.
I love you, Gordo, but holy cow. Kind of funny. It's just such a lower from 99 to 93 when you're 300 points above or 250 points above that level right now. Anyways, I understand where Gordon's coming from. He doesn't understand the fundamentals. I don't understand it either. Just tell you what's hot is hot. It's all that matters in this market. Sometimes fundamentals are meaningless when the sentiment towards the stock is good. When you got Musk buying, people are going to say, I want to buy there too. So there's people that really believe in this story. I am not one of them, but at the same time, I'm not shorting the stock because I respect the momentum, and it's got momentum on its side.
All right. Full disclosure, I have the smallest short position here in Tesla.
You're short Tesla?
Just shorted via some puts. Very,
okay.
very. No, I wouldn't short the stock. All right. Very, very small. I'm keeping an eye on 355. That was your 2-day high, 354.97. It's backed off. I was kind of hoping we would stay under 346. That's not the problem, or, that's not the case right now. Definitely, I will get more excited if it can take out that 2-day low at 338, but a close above 355 here, and I'm just going to hit the quick exit on it. Nothing more than just, a little bit overdone on the technical side. And also, if you go back long term, you've had a trading range since November of 2017. The top of that trading range is 360. So I may have to give it another shot there. But I don't know. It just seems a little bit too much, too fast. But Gordon is not winning this one so far. The stock's trading up $3.52 at 348.30. I would have been more impressed if he would have bought this like 3 or 4 weeks ago, when it was down at 280, but we'll see. No harm, no foul here. Just trying to call a top at Tesla.
Jump over. I threw a couple stocks in my swing trade portfolio. One of them was DBX.
We lost Dennis.
Yeah. Wow.
Dennis?
We lost Dennis again.
No, I'm here.
You're
DBX.
Here? Okay.
My kid was just going nuts in the background, so I threw it on mute. Wait, I muted my boy.
Wait, you just muted yourself because your kid was screaming?
Don't you wish you
Yeah,
had a
that's
mute
what I
button
did. The
on
kid's
your
like
kids?
screaming. He was excited that I bought the Dropbox.
If you had a mute button on your kids.
I put DBX in my portfolio. This is just a swing trade. I like it. I'm going to stop out below the 29.70 area, but I just like the candle from 2 days ago.
Yep.
So I bought it yesterday right around 31. I like the fact I'm already up in a point, 32. And I think, if it can get above the double top there at 32.30, then it could be off the races here again. I think it's just starting to form a little momentum here. So I jumped on the train. We'll see if it can keep it going.
Fill a gap up to 32.92. That was your April 12th low. Had a real bad day on that day. All-time closing high 33.27. So there's a 33, Dennis. That could be the next stopping point here from Dropbox. They gave you all day and all night to get in at the $30 level. Institutions accumulating there at 30 for so many sessions, and now you got to bounce. So I think a few in the chat joined you on that one, Dennis. So congratulations. Buy Apple's talking about Etsy, ETSY, another retail stock here. $5.34. What?
It's on fire. It's got guidance.
Yeah, they just raised their guidance. That's what it was. So gross merchandise sales for the fiscal year going to go from 16 to 18% increase to potentially as high as 19%. Sales growth potentially as high as 34% for the fiscal year.
Wow. No, I mean, what
it's again the same story. The hot get hotter. And, you see a consolidation for 3-4 days. I had this on my buy list too, which I'm kind of kicking myself. Back when it started to break out, you can see it just broke out above like the 32 area. I was like, man, that's a technical break. I should buy that. And I did not. Now I'm kicking myself. The thing gets the good guidance. It's up $5, but it is what it is. I mean, these stocks, it's again the same story. We keep pounding the table every single day. The hot get hotter and the cold get colder. And what is hot stays hot. You're buying the winners. You seem to be making money.
All right. Yeah, I mean, 38.49. I maybe think about $40 here. Really blowing away the former all-time high. That was 34.22. So wow, nice move here. And what do they sell? Like art online, or is it more than that?
It's a marketplace for crafts and stuff.
Okay. Well, maybe they'll be getting a bunch of stuff from Michael's stores or something to sell.
Well, you can like make your own stuff and then sell it. That's
Dennis, we got a forbidden stock on the show coming on from Stargazer.
What do you got?
Oh,
Stargazer wants to know about dry ships.
No, it's forbidden. We haven't talked about it in 6 months. You're going to break it? Break the chain? I have not looked at dry ships for it. Okay, we'll talk it. You know what? It's getting a bit. It's starting to catch a little bit. There's like tops. There's like, what are the other ones? I can't even remember. It seems like every 3 to 4 months, all of a sudden the sector gets hot. They take off for a bit. You know what? There's a technical breakout there, and I mean everything is a bull market where everything seems to be going higher. What's the all-time high? It's always fun to talk the all-time high, Joel.
Oh boy, here we go again.
You got to go figure it out. It's so hard to figure out because there's so many reverse splits.
This is really amazing, Dennis, because I'm going back here. I'm going back to 2014. I don't even know how this is possible, but I don't know. I mean, I see one thing. It can't be a negative number, right? Because I see in October of 2014 a negative 21,500. So I don't know how they figure that, but in November,
forget the negative number. It's definitely not a negative.
I'll just give you the
wasn't it like $1 million or $6 million?
18 million.
18 million?
Yeah, 18,816,000. That's like get your order in there.
That's so many reverse splits that the all-time high is now $18 million.
Yeah.
This is why we don't talk this stock on the show. It's the eternal money burner. I mean, there is the odd person that comes and buys at the right time, makes money the odd time, but it's always one when you look at it 3-4 months later, it almost always seems like it's lower.
Okay.
Although in the last 3 months, dry ships hasn't made new lows.
Yeah.
So maybe there's an opportunity there. I'm probably not participating.
No, I can't even look at the chart on this. Looking at the action from yesterday, 458, 451 close. The volume picked up a little bit yesterday. So if it stays green, 451, maybe take a shot at $5 here. We got about 3.5 minutes left. Did we cover everything that we wanted to cover on the pre-market show? How about Oracle? Nomura, Sachs, Oracle with I think it was just a price target change, right?
No, downgrade.
It was Nomura. No, it was
JP Morgan downgraded.
It was Nomura lowering the price target and JP Morgan downgrading to neutral. They kind of a 1-2 punch there this morning.
And that's a big hit for Oracle. You typically do not. Oracle usually moves 30-40 cents in a day. It's one of those slower, older tech stocks. There's a big down move, $1.16, but I mean, it is a downgrade from JP Morgan. They report earnings coming up, do they not?
Oh, they're always super late. Let's see.
Yeah,
let's
I got
see
to think
when
that's
they
coming
report.
up.
Yeah, I think it's this week. They report on the 19th.
So it's coming up. So keep that in mind. You often do see a run up in Oracle. It might not happen this time. I think it wanted to try to do that, and it had been running up for the last few weeks here from 46 to 48. But now it's slapped with this downgrade from JP Morgan. We put a wrench in the plans of the run up ahead of the earnings.
Yeah, Oracle, this one just had been climbing just very, very incrementally since its last earning report. Had to gap down, but recovered in April. I mean, $47. I mean, that's where we're trading. We're trading 47.11. You could kind of like to see it get away from there. 47.10 was your June 6th low. Your June 5th low was under. Actually, you had quite a few lows from 46.70 to 47 even. So I'm not slapping this down $1. Let's see if we can hold 47 and get a little rebound. See if they want to fade the analyst here. Just want to talk about a stock that has earnings tomorrow. One of Dennis's favorite stocks, Canada Goose Holdings. Up 33 cents, 45.50 going into the report here. I mean, I just looked at the Tiffany chart, so I'm not going to tell anybody to,
Yeah, and it's a retailer. You could say, oh, well, retailers have turned, but this one's its own animal, and this thing is probably going to run up. I don't know what are the options. Do we know what those like the straddle's pricing for? Oh my God! I bet this thing was $5 up or $5 down though.
Yeah,
it'll be wild. It'll be a wild one. So expect a major swing here in GOOS.
And
I'm not going to try to call it.
If you like $1,000 coats or whatever, I mean, they're very expensive. And
it's made with with a rare Canada Goose that I have literally 25 of them on my lawn at night. Poop everywhere.
Oh, I was just gonna.
My neighbor shoots paintball guns at them, so try to get rid of them.
That's not nice. Okay.
He doesn't hit them. He just shoots them near them, so he doesn't kill them. He just tries to scare them off his lawn.
I have to get up and visit where you live because it sounds like it's the wild, wild west up there.
There is so many Canada geese here. They'll be like in the middle of this time of college. They'll be like in the road, like the traffic's all in a traffic jam because there's a pack of Canada geese in the middle of the road. They are literally everywhere. There are so many Canada geese up here. So I don't know. They're protected most of the time. It's just a matter of like when you can. I think you gotta like, I don't know. I'm not a hunter, but there's certain times you can kill them.
All right. S&P's up 8 points here as we end the show. Your pre-market high, 27.89 1/4. That's just a little above the high close from the move so far that we had at 88 1/4. So 27.90, that's your big level on the upside. Coming back on the downside, I mean, they can't put any hurt into this market until we take out the close here at 27.79. Your pre-market low way down at 27.72 1/4. 9 o'clock, 10 seconds after. Good timing by me. Spencer, you want to preview our final show of the week?
Yeah, I mean, not really much to preview. We don't have any guests scheduled at the moment. Going to keep this experiment rolling at least through this week.
Getting a lot of positive feedback from the chat. I appreciate.
I mean, look, yesterday we didn't schedule a guest, and we ended up getting one spontaneously. We got Marc Yusko, so that's what not having a guest can sort of do. Sort of give you that extra flexibility there. But no guests lined up at the moment for tomorrow's show. If you want to catch any part of today's show or any part of our archives going back like 3 years now, you can do so on our podcast, iTunes, SoundCloud, Stitcher, TuneIn. Just go on any of those platforms and search for PreMarket Prep, or go on YouTube, youtube.com/BenzingaTV. You can find the show there as well with our pretty mugs on and the charts to accompany the video with the podcast. But that's going to be it for us today. So thanks to Marc Chaikin. Thanks to all of you who joined us in our chat rooms. Hope you all have had a good morning and you have a good rest of your Thursday. And I hope you join us again tomorrow. Have a good one.